So insurance has been a non-issue, I would say, for the last 10 years. I don't know if the panelists agree with that. Nobody really cared about it. Nobody comes up to you and punches you like they do now. The market's really changed. Rates have skyrocketed for certain lines of business. With our audience here, the business jet market has radically changed. And we've experienced decreased capacity, ability to get the limits you want, and major rate increases. So we're going to talk about that today and what we can expect in the next 18 months. So, Zoe, why has the market changed?
Thank you, Ed. Good morning, everyone. Thanks for hanging in here for the session. So the sudden change, it looks sudden, but I would venture to say it's not quite as sudden as it feels and appears. And I'm going to take you back ever so quickly to when it actually started, which was actually pre-9/11. Pre-9/11, we saw an increase. It was the last burgeoning hard market that we would know of in our cyclical insurance fashion. And it was like a roller coaster. It was starting to harden at the end of the 90s. Prices were starting to go up a little bit, lots of questions asked. Risks were starting to get a little tight to place as a broker, a little uncomfortable. And then 9/11 happened, and the premiums catapulted, doubled. Right after 9/11, there was a tragic major airline crash, which goes unrecalled because of the tragedy of 9/11. But what that served to do was open the market to a lot of new entrants who said, wow, there's money to be made in insurance. Let's put some capacity into aviation insurance because we can get a good return because the prices are good. And so we saw extra supply. And in certain parts of the market, people have enjoyed reductions virtually since 2002. So fast forward to 2017. In 2017, you had some of the most catastrophic natural disasters with Hurricane Harvey, Irma, and Maria. That was $77 billion of losses. Now, Aon cites a number of $2.9 trillion of catastrophic losses between 2010 and 2019. This is in natural disasters. That is 1.9 trillion larger than the previous 10 years. So what this served to do is, all the people that were writing aviation insurance also wrote those other things. Overnight, they were losing money. And if you're a major multinational insurance company, what might you do? You might say, give me a traffic light system now. The board comes to you. Give me a traffic light. Red, amber, green. If it's green, we'll leave it alone for now. If it's amber, we're going to take a hard look. If it's red, stop it. So overnight, it would appear people stopped writing aviation insurance because they were actually, because of the soft market for that long period, the rates were not sufficient to pay the claims in the market. And so that we had about estimates 20 insurance entities leave the market in 18-19. And this capacity crunch is what has culminated in these rate changes that we see now.
Nice.
Would you summarize?
I totally agree with you. So we have rate increases, which is what we're coming to here. Todd, is there a typical rate increase?
Oh, typical. Just as much as there's a typical insured. The rate increases vary by segment. There's always been a historical nature of claims for various segments of the business: ground handling, manufacturing, ag, helicopters. That's the sensitive conversation, having the helicopter convention just finished up last week, and of course the tragedy of Kobe's helicopter on top of the scenic helicopter crash in Kauai. So the helicopter industry is seeing a radical increase. To see 100 or 150 or 200% increases on every single account is not a surprise now that we've gotten used to those types. We're seeing on the corporate side, the business side, the charter side, an increase that is commensurate to the past lost history. And that's an important factor, is that the underwriters cannot predict the future. They know that there is a consistent level of claims that occur within the industry, day-to-day operations. It's just a very consistent level year after year after year that things will happen within the aviation industry by segment. For those that have not had losses in the past 5 years, they're going to get on the low side, 15 or 20%, on the high side, 30, 35. That's the typical increases we're seeing. For companies that have had losses, and it's irrelevant to the type of loss, which has been surprising to me more so than anything else. A FOD loss is just as important as a pilot error loss in the eyes of an underwriter. It's dollars out, and it doesn't matter to them as to why that loss occurred. So if you've had the losses in the past 5 years, actuarially, you might be looking at a 50% increase or a 60. Or if you've had multiple losses as an operator with managed aircraft and a fleet of 20 or 25, you might find the insurability of the operation to be more difficult than in the past. And so the solution, aside from premiums, has been an increase in the number of underwriters participating in the placement of any one account, where you might have had one underwriter carrying everything 100%. Now you might have 4 underwriters carrying an average of 25% or any variation that brings it to that 100%.
So I think that's a radical change for the audience, for all of us, even in the business, where I know we would write a Global Express with $1 billion limit for $14,000 for the liability portion. Now you don't have anybody that's willing to do $1 billion limit. You're going to use 4 underwriters to do that. Right. So that's a big change. Is there a difference between the rate increases that fleet operators have versus a single Part 91? Would you see a difference? Alex, chime in too if you've seen that.
Yeah, I mean, it will all depend on the record of that operator and what they're doing, to minimize their claims and their own particular experience. I think, for a while to come, we would expect fleet operators to attract better rates. There's a bit more stability of premium there, and I wouldn't see that changing in the near term. And they're also better placed to be able to improve their records in terms of, a lot of losses come from third-party handling. It's going to be easier for an operator that is used to dealing with contracts and that sort of thing to be able to make sure liability, stays with the parties that are touching the aircraft when the loss happens. And also, we've seen on the airline side a lot of focus. The operators, they'll push. They don't have a lot of choice in some places they operate to in terms of who they're contracting with for ground handling and that sort of thing. So they almost push guidelines onto those operators and control behaviours to minimise losses. So they're much more able to do that than an individual would be.
So it's kind of in keeping with what the aircraft sales guys were saying, even older aircraft now, so you have a FOD, foreign object damage loss, on a G450, which is now amazingly an old airplane, that can be $600,000-$700,000 now. And that's, it's hard to make money when you're charging $22,000 for the airplane premium. So is there a way that that all of the insureds can reduce their rates? Is there a way to do it? Reduce the increases? Can they fight the increase?
Well, I think, just quickly, I think, obviously the rates have decreased over the years substantially, but also the coverage has broadened. Deductibles have come down. So, a quick way of improving the projected outcome for underwriters is deductibles increasing again, and then that would obviously limit the rate change that's required to bring the accounts back into profitability.
And I would say from a qualitative point of view, we had this debate in our preparation time, but a lot of the intermediaries will give advice to go early, to be complete with the information that you provide about your insurances. And in the soft market, people want to get on a risk, we say. They want to take the business. They want to be part of that premium stream. So you find that sometimes the questions are not so pervasive, a little bit lenient, and not too much of a bother. But in a hard market, whether it proves to be a deciding factor in who has the loss or not, underwriters are much more keen to understand and show their management that they are understanding the risks they take, whether it makes a difference to the future or not.
That's a very good point. I mean, when we say the soft market, the rates were crazy, competitive. you would call an underwriter and say, I have this airplane or this fleet, and I think Todd would agree, they would say, what do I need to do to get this? It was like almost napkin underwriting, and they had no concept of any particular variables on certain airplanes. I think now we've gone the other extreme.
Yeah, what I think we've seen a real change is there was no repercussion to bad underwriting over the past dozen years. We've hit, that's been the trend of where the rates were going down on a repeated year after year basis. An underwriter makes a poor decision, a loss occurs. He's still got, the accolades for having added premium to the book when the account was written. They'll celebrate, putting an airline on the books that might have a 300% loss ratio, just because now they're the lead on that account and they're thrilled to be able to brag about it. The converse changes that a hardening market has created, and having spent 4 decades in this business and starting out as an underwriter myself, no underwriter ever gets in trouble for saying no. Now, if there were no repercussions over the past dozen years, all of a sudden, in the past 18 months, the repercussions are, is my company still in business? Do I have a job? Am I going to be criticized for an aircraft that I've insured that did have a loss, even though I asked all the appropriate questions? And so insurance for aviation is probably more emotional in the personalities of the individual underwriters than I think any other segment out there. And when you have a fearful underwriter, someone who's afraid of repercussions of a decision, employment opportunities, or whether their company is going to be around or they will be around with their company, we shift into a radically conservative approach where so many questions are added to the equation, and it goes farther than just the premiums being the important factor.
And just to add to that, and to kind of put some more color to the story, so we were talking about the limits, and so what we used to see is, if say you had a 200 million hull or more, one underwriter could insure that aircraft and its liability, one underwriter. And there were many of such one underwriters, one insurance company, if you will. As the market has become more pricey and people are reducing their limits that they wish to accept, what you're seeing is that more than one underwriter has to participate on such a risk. Now, previously, when there was one underwriter, there was like 10 other underwriters that if that operator had a claim, they could just go, oh, well, I haven't had the claim, I'll still write it at a nice price. Now, if you have multiple underwriters on one risk, there's an incident, many people have had the hit, and it's harder to spread. Would you say that's right?
Yeah, that's fair. And also, as you know, you have to renew a placement and bring more market onto that placement to complete it. Every market is almost bringing a new condition that they want to participate on that risk. And I think, as you alluded to, Todd, there is emotion out there. People, if they've had a bad experience, with a claim, and that could be getting a repair, or it could be a particular lessor that is pushing for a total loss when they think there's plenty of value in the aircraft to repair it. It can color a judgment, and they'll take a stronger stance on it.
So all those factors come to the kind of one of the key questions for this group, I think, because we have bankers, attorneys, OEMs, resale people. So one of the things that was a product of the very competitive, as we call the soft market, we call it the soft market, was that nobody really paid a lot of attention to contracts. So whether it was a purchase agreement, an operating agreement, you need 100 million, yeah, we can get that. Oh, actually you need 200 million, yeah, we'll do that, that's fine. So I think those days are gone. So do you see the total group here from everybody's perspective? Do you see it more difficult to obtain the liability limits you need? And is it a certain type of operator is more subject to reduced limits than another operator? Todd?
The requirements that this industry, the attorneys, the sales operations, the lessors, the trust organizations, the limits that are in your contracts, the expectations of certain coverages to be in place, that you have in a relationship with your current clients, I'd say if you walk away from anything, from my perspective, from an insurance discussion, is read everything that comes out of the insurance carrier that is related to your client's activities. Because the changes that are being made are material, but they're not publicized. You might see a reduction in the limits of liability. You might see key coverages that are being removed. One of my, Chicken Little, the sky is falling claims has been that the ground operations, especially in the United States, are going towards the deferring of third-party risk. If you were to go take your aircraft into Gulfstream into Savannah, you're signing a waiver that says, Gulfstream, if you break my airplane while it's in your care, you're going to repair it, but you're not responsible for anything else. No diminution, no loss of value, no loss of income. FBOs have traditionally, in our soft market, freely paid those consequential losses. That is screeching to a halt. So those that have an equity interest in the aircraft, and that aircraft might be involved in an incident caused by a third-party ground handler or a maintenance facility or a hanging facility, or just getting fuel. You fuel with Signature, you're going to sign the waiver automatically. Just be aware now that there's an uninsured exposure that an equity holder has in every aircraft. If some sort of damage occurs to it, it's not going to be addressed by the insurance industry as freely as it has in the past.
Zoe?
Yeah, I have talking to a friend back home who has a logistics network, and he had a case in point where an engine was delivered and the person on the other end received it, but it had arrived damaged. And by the time 5 other people had passed it around, they didn't know whose fault it was anymore. And the point there was really what he learned from this scenario is that every piece of a chain of business delivery or aircraft operation has to be succinct and has to be understood and checked. And from an insurance point of view, I think great advice to people who are touching the insurance issue is to make sure you're very close to your broker and that you ask for help if you want some contracts checked. Because if these things are creeping in and out in different parts of the contractual language, in different parts of the operation, you just have to be vigilant.
I agree. One of the biggest challenges right now for the industry, especially for the OEMs, is we're all very fond of Phenoms, Mustangs, single pilot airplanes. Very, very difficult to deal with underwriters on those issues. So who buys a beautiful Phenom 300? A wealthy guy, probably who likes to fly it himself. I have several operators that are extremely high net worth individuals that fly the airplane themselves, and they're like, well, can I get 500 million? I said, we can get you 5 million now. And maybe they had 100 million before. New airplanes like the Cirrus Jet, very, very difficult to insure for the high net worth individuals who will sometimes buy them. We've had a couple that we could only get $2 million on, and these were experienced pilots. So I don't totally share the underwriter's fear of single pilot operations. If you have a good pilot, it's a good pilot. I mean, the military flies airplanes single pilot all the time. If the avionics and such, the backup is there, you're fine. So Alex, do you see that as a big crisis in the business?
Yeah, in terms of not a crisis, but in terms of those kind of requirements being applied, I think
is that's a hot subject for job security for you as an underwriter?
Yeah, it's. People are just setting high barriers for new business. Essentially, sure. I think that's where it's at, and. It's obviously not an issue with flying single pilot. It's legal to do so. It's approved by the FAA. But perhaps underwriters in certain markets are struggling with differentiating the risk. Or they can't set a higher price for it. They just say it's 2-pilot only, or we're not getting involved. And
that's like telling someone they can't fly. Some of our operators in the U.S. They're like, I bought this as a single pilot airplane. I've got a high time pro that flies it. I'm not going to fly it with 2 pilots. Well, unfortunately, you're probably not going to get insurance in some cases.
Well, this is an example of what would appear to be quite draconian measures that are put in when the prices are not sufficient and the portfolios have to be pared back. It's very simplistic but easy to apply to make these decisions not to insure something like that. We don't do that anymore. We only do it like that, blue planes on a Thursday.
So let me ask the panel, is it a consensus that it's more difficult to obtain higher limits?
Oh, without a doubt. It's part of the conservative nature of a new market that offering less is less exposure, which is a good thing in the market to keep themselves protected.
But for more money, too.
Well, for more money, if it's even available,
Yeah.
which might mean then you're bringing in multiple underwriters where one or two underwriters did it in the past, which, again, for the involvement of those that have clients that had an expected or a past limit of liability or an operational standard that they were used to or have already ingrained into the contract, whether it's a lease or a trust or a lien for which a minimum limit of liability has been placed. When you have a higher risk perceived type of an account, then you might see the next renewal comes through with the limit far, far below what it was prior.
And Alex, you're an underwriter. We won't hold that against you. But you do see that in your market, too? I know there's less business jets insured in the European market.
Yeah, I mean, it's a case of the 100% lines are gone. And so you're just trying to build up as much limit as you can. And I think, in the States, you mentioned it earlier, Todd, the helicopter losses, people have suffered greatly from that. And that just, it's the same markets riding business as helicopters. And so passenger liability stops are something that I think are being introduced as a way of coping with that.
So we got a bunch of questions, but we have, this is not going to go to the next thing. Questions? There we go.
Oh, you had one about what can people do?
When we talked about that, but so again, as a wrap up, before we talked about questions, what can the customers do, insureds do to get the limits they want or need or require to operate?
Well, I didn't want to leave us in a pessimist place because the other panels were so optimistic. So,
But we're in insurance.
oh, it can be fun. Well, so I think we've agreed, and these guys can pipe up too, but it is where we are in the market cycle, and it does seem quite painful and itchy. But what I have noticed people looking at over the many years that I've been in the business is when you have to look at, some prices are going up in a certain part of your organization, systemically, what is the whole cost of your business? And where are costs? Where are other places in the business that can be saved? So in an offset type way. So insurance is a distressed buy. And that's one thing that is a bit difficult when you sell it, is because nobody really wants to have to buy it, but they do. But there's some insurances that can protect your operation. One that's available, which is not very well known, is aircraft on ground insurance, which pays for the third-party extra costs of getting in a third-party jet in case of an AOG. That is a protection of income. It's not a distressed buy, and it's optional. But if you look for stuff like that out there, what systemically, where else can you save money when you got to pay it over here, is something to look at.
It's true. So we have some questions. Here's a good one. Do underwriters have sufficient knowledge of the business aviation sector, and is that impacting rates? What can be done to educate them? Todd Guelich, please answer.
I have no filter, so I'm often asked the ones that would be politically incorrect to answer. In the U.S. market, I've saved you. In the U.S. market, the answer is no, they do not, because over the past 12 years, they have not had to underwrite. They priced it, they've priced their product, they bound the policies, they didn't ask any questions. When Ed was somewhat humorously going, the underwriting question is, what should we charge? That was the underwriting question for year after year after year. They didn't care about the underwriting. Now, as we've gotten into an environment where the fear has to be addressed of doing the wrong thing, they're asking questions that may or may not have relevancy to the actual placement of the risk. So educating the underwriters about a specific business, a specific operation, if you're a manufacturer, about the specific aircraft, why it's safe to have it single-pilot operations, teaching those underwriters that type of information is going to be brand new to them. They don't have any hands-on experience.
And good luck with it. They're not very receptive to it. No offense, I know you are, Alex, I'm sure, but most underwriters are not. Is there any significant difference between Europe and the US from the view of aviation insurance carriers? Alex?
Liability?
Liability is a really big issue.
That's the big difference, really. Yeah.
So I was once told that the average airline loss goes for $5 million a seat or $10 million a seat.
Depends on the nationality.
Depends on the venue. Let's say it politically correct.
Venue.
The venue and the nationality. But in the US, I know the fear is that the average award is quite high on a corporate jet accident or any kind of maintenance-related accident that can be attributed to the maintenance shop. So do you see that, Todd? Do you feel the difference?
Yes and no. I mean, you talk about the airlines. I mean, yes, $5 million was kind of the average we've talked about. The Southwest Airlines claim where the poor woman was sucked halfway out of the aircraft, that was settled without a formal actual court case, litigation, mediation, and it was settled for $84 million for her. And then you talk about another $100 million or so for the passengers around her who are emotionally distressed to have witnessed it. So the sky is the limit in the United States when it comes to paying out claims very freely. And the underwriters have freely paid those because they had reinsurance. The reinsurance is scarce, it's expensive. Now it's out of their own pocket. If it's their own money, they want to protect it by offering less.
Here's a good one. How much of the changed insurance environment today is a direct consequence of the 737 MAX losses and projected future losses? Source subject.
My opinion is that that is still an ongoing process and that the effects of this, the effects that have led to this market as we know it were the ones I described, and we have yet to see the outcome of that.
I'd say zero.
Zero on the current. Yeah.
The max is affecting the current rates. There was no effect whatsoever to be where we are today with the rates. These are actions of the last dozen years.
Correct. So I guess,
yeah,
Alex,
I could perhaps offer a contrary opinion to that. I think, the reinsurance market is probably expecting to lose 4 or 5 years premium perhaps from the max losses. Every underwriter relies on reinsurance to cover their peak values and limits, and the reinsurance market has got to try and claw back, from their customers the losses that they've paid. So every insurer out there is paying increased reinsurance costs, whether they're involved in the Boeing Ethiopian line losses or not. So that's a straightforward increased cost for underwriters that we're paying that now already. So part of the rate increases that are being given out to the market are going straight up the chain to underwriters.
And I don't disagree with that. That all the future products that are being offered by the underwriters will be heavily affected by the max and the ramifications of $1 billion coming out of the insurance industry. But this is a 12 years of complacency and cash flow underwriting that has created this sudden jump. And premium aside, I mean, we're looking at rates that are the same as maybe 7 or 8 years ago, which if it's 8 years ago, has the same rate as where we are today. 9 years ago, we were celebrating 8 years ago having a lower rate. So we're returning to rates in the past, but the abrupt degree of going from 1 year to the next to see that dramatic change versus spreading it out over that 5, 6, 7 years, that's been the real heartache that we've had to explain.
Yeah, and I think that if you go to Alex's point about reinsurance, that's usually a 1st of January renewal, and that just happened. So therefore, there's a knock-on effect. There's an eternal debate in aviation insurance. Does the direct market drive the reinsurance or backwards? But it's tied together. A lot of the same players in both spaces. So
just to clarify, reinsurance is the insurance that an insurance carrier buys to mitigate its losses or reduce its losses or cap its losses. So here's another question, which it's interesting. Some engine programs now offer FOD or FOD gap coverage. I didn't know that. Should insurance rates offer a reduction in this case? I guess if you have it, that's what they're saying. If you have FOD or FOD gap coverage.
I think if you can evidence the fact that your record will improve because of this coverage or any other reason, then credit should be given for that.
Hypothetically, I think so. I think not, though, in reality.
Well, again, I mean, we're still in that transitional change where they're looking at loss history of the past 5 and the promise of safer or lower exposures in the future, with the exception of deductibles going up, being a direct economic contributing factor to a renewal. It's a reduction of risk, but past performance is going to be much more influential.
How did we get here? I think we just talked about that. Rates are out of sync with the risk. Unfortunately, everybody's paying for everything. Someone mentioned a question about agreed value of the aircraft. Should we try to go for lower agreed values? It's an interesting point. If you overinsure an airplane, that's a bad thing, because if you have a partial loss that might have totaled it if it was realistically insured, you're now stuck repairing it or having a mighty fine fight with the insurance company. So yes, we should have realistic agreed values. It's real difficult to achieve that. We're listening to the thing about the Blue Book, and we always have customers call us, even on heavy aircraft. They'll say, hey, do you have a Blue Book value for this thing? And I'm like, you really need a full appraisal if you want to do it properly, as Richard will tell you. But just using the Blue Book doesn't always help. But yes, we should have more realistic agreed values, because then you're not going to have a dispute with the underwriter. Am I waking up over there, Alex?
Do one more.
Do them some more, okay. Take one.
Let's see.
Okay, so I know that's in the climate we're in with aircraft transactions, aircraft brokers are more concerned about their errors and omissions. They could be sued by someone. And what size limits would you recommend for a broker getting E&O? That, whenever you're in liability, you tell me what kind of loss you're going to have, I'll tell you what to buy. But theoretically, I think you should buy as much as you can afford and to cover your assets. But I know that's difficult to obtain. There's a program, isn't there, for that? For brokers, aircraft brokers?
But
Professional liability, it's a different area for us.
yeah, P&I would say that it's also impacted by similar forces that we described, because this is a worldwide integrated market. But I would say, though, what Ed's point is, where there is available limit and it's cost effective, it's wise to take.
So here's kind of a summation question. How much did home third-party liability insurance premiums increase over the last 5 years, especially for international ops, non-US? Alex?
They didn't increase the last 5 years.
Right.
And
how much did they go down in the last 5 years? Quite a bit.
by a half, I would say,
Yeah.
certainly in the London market. It's quite a spiky question at the bottom, perhaps, but I think that the difference between the 737 max loss and any catastrophe loss isn't necessarily so much of an issue for underwriters, because they buy reinsurance and they're protected against that. The problem for underwriters is just poor performing books and attritional losses, and that's what we're dealing with the business aviation market and general aviation. And it's actually performed over the last 5-7 years a lot worse than the airline market. So that's why we're seeing, I think, more disruption on the general aviation side than the airline.
And I think to that question that you just answered, Alex, the money for the premiums taken for each part of the aviation insurance industry are not kept in a separate and discrete bucket that they dip in just to pay the jet claims, and then I'll take that one just to pay an airport claim. It is a portfolio of risks that is used to manage the finances and to pay. So the insurance is based on the many paying for the one, and that's how it then operates. So there is an understanding of the differentiation between the different risk types, but the finances of it mean that it's quite integrated.
Last question. How does damage history play into the rate?
Well, it depends on how you interpret it. If you're talking about the damage history of an aircraft that has had damage, it's been repaired, and it's been put back into service, zero. But if that operator has had losses and damage to aircraft within the fleet over that time, the 5-year typical time span that the underwriters ask about, that's massively important to how they price the product, or even more importantly, what coverages they will offer, how much of the risks they will take, how many other underwriters have to kick in their participation. So the loss history of an aircraft owner or a fleet manager is probably the #1 affecting factor to the coverages you're going to get, the deductibles that would be paid, as far as contribution, and the ultimate premiums that would be charged.
Good? All right, thank you.
Thank you.